Fed in action and stares into the headlights of a troubled economy. Oh dear. Hello, this is Chart GPT today. Yes, the Fed made this decision and they basically held rates as it is, which some people were looking for a rate cut, others thinking that the rates are going to go higher. So a little bit of indecision here. So the decision is to take no decision. So take a look at the dot plot, which is what everybody focuses on. So a little bit more hawkish in their assessment of what's going on. You can see the changes from the December to the March meeting. They just ticked up just a bit there. Here's another way to look at it. The December dots versus the March dot. Now these dots are what the different members believe that rates should be at. And of course they're thinking that rates are going to come significantly lower over time. Now some of the banks are out there making their prediction. Cuts expected in 2024. One is only expecting 2, and most people are expecting 3 cuts. There's probably about 75 to 100 basis points. Some even 4 and 5. A lot of people think 5, so it's a very dispersed predictions there. So economists are a bit perplexed on what's going on. Take a look at some interesting fact sheets of what's going on at the Fed. You know, they've been trying to unwind this QE from almost now a couple decades now almost. And you can see QE 1, 2, 3, 4, and 5. We still haven't got back to the QE 5 levels when they started. So the question is, can they continue this as the economy can continue to go into stagflation mode? So we'll see where that goes. And then they're also looking at the federal budget situation. You know, Joe Biden wants, was it $7 trillion in new taxes? So it's going to be a dubious thing. You see the gray line, the kind of the gray filled in line, is the debt outstanding, and it is going exponential there. Expenditures are going up. You see the COVID spikes, but it's still going higher. And the tax receipts are meandering along, but they want significantly more to bridge that gap. Now, we made some predictions on the Fed rate predictions here in the past. We kind of show this periodically, and this is where we thought, the black line kind of shows where we thought. We did think there was a war impending, but maybe not. If there's no war, we think that we're probably too positive in terms of rate reductions. So we're going to up our estimates now to a low of about, we'll go in line with the 3 cuts, maybe 3 to 4 cuts with no war, getting down to maybe 4%. And if there is a war, well, then all bets are off. You'll see coordinated rate cuts globally, and that will come off significantly. So right now we'll just assume the best and no war, so the red line is where we're going to be at now. We'll continue to follow whether this makes any sense or not going forward. But take a look at their AI and say, why do economists often get forecasts wrong? And the various factors, the top 5 that they say in terms of what the AI says. And take our online poll. Will interest rates in the U.S. be higher in 12 months or lower? Now don't forget to subscribe.